Hello, savvy investors, and welcome back to the $25 Investor channel, the place where we empower you to build a robust financial future, one smart investment at a time. Have you ever wondered if a small, consistent weekly investment could truly make a meaningful difference in your long-term financial goals? Perhaps you've thought that starting with just $25 a week is too insignificant to move the needle. Well, prepare to have your perspective shifted today. Because on this channel, we believe in the power of consistent, disciplined investing, no matter how humble your beginnings. We're here to show you that even a modest $25 weekly contribution, when invested wisely and consistently over time, can blossom into a substantial nest egg, providing a solid foundation for your future financial security. We're not talking about get-rich-quick schemes, but rather a proven strategy. Today, we're going to dive deep into a specific stock that many of you are already familiar with, a company that has been a cornerstone of American retail for decades, and one that offers an intriguing investment opportunity for those looking to build wealth over the long haul. We'll explore how regular, manageable investments can contribute to significant growth, turning that seemingly small $25 a week into a powerful engine. So, if you're ready to unlock the potential of your money and see how consistent, disciplined investing can truly transform your future, then stick around. This video is going to be incredibly insightful and, dare I say, life-changing. Let's begin our journey into smart investing. Today, we're going to talk about a household name, a company that has touched almost every corner of the globe, Walmart, or as it's known on the stock market, WMT. Many of you might be thinking, Walmart? Really? Is that where I should be putting my hard-earned money? And my answer is a resounding yes, for a multitude of reasons we'll explore. We're going to specifically examine what happens when you commit to investing just $25 a week into WMT. This isn't about day trading or trying to time the market. This is about a long-term strategy, a commitment to building wealth steadily and surely, leveraging the power of dollar-cost averaging and the consistent growth of a fundamentally strong company. We'll break down the numbers, look at the historical performance, and project the potential future outcomes of this disciplined investment approach. Our goal is to illustrate how accessible and impactful long-term investing can be, even with what some might consider a small initial commitment. $25 a week might seem like the cost of a few coffees or a takeout meal, but when channeled into a strategic investment like WMT, it transforms from a fleeting expense into a tangible asset with significant growth potential. Let's dive into the data. So, what exactly is WMT and why should it be on your radar as an investor? WMT is the ticker symbol for Walmart Incorporated, the largest retailer in the world by revenue. Founded by Sam Walton in 1962, Walmart has grown from a single store in Rogers, Arkansas, to an international behemoth with over 10,500 stores and clubs in 20 countries, serving millions of customers every single day. Why is WMT important? Its importance stems from its sheer scale, its dominant market position, and its pervasive influence on the global economy. Walmart is not just a retailer, it's a massive logistical operation, a technology innovator, and a significant employer. It offers a vast array of products, from groceries and electronics to apparel and home goods, catering to a wide demographic. This broad appeal and essential nature of its offerings mean that even during economic downturns, people still need to buy food and household staples, making Walmart a relatively resilient investment. Now, why should you consider investing in WMT? There are several compelling reasons. First, its immense scale provides a significant competitive advantage. Walmart's purchasing power allows it to negotiate lower prices from suppliers, which it then passes on to customers, attracting and retaining a massive customer base. Second, Walmart has consistently adapted to changing consumer landscapes. It has made substantial investments in e-commerce, successfully competing with online giants and offering convenient options, like curbside pickup and delivery. This adaptability demonstrates a forward-thinking management team committed to maintaining its market leadership. Third, Walmart's global presence provides diversification and access to growth in emerging markets. Fourth, the company has a strong track record of returning value to shareholders through dividends, which can be a significant boost to your total returns, especially when reinvested. Lastly, and perhaps most importantly for our $25 a week strategy, Walmart represents stability and consistent, albeit not always spectacular, growth. It's not a speculative tech stock, but a solid, established company that continues to innovate and expand, making it an excellent candidate for long-term, consistent investment. Investing in WMT is investing in a proven business model with a history of success and a clear path for future growth. Let's put Walmart's performance into perspective by comparing it to a widely recognized benchmark, the S&P 500, often represented by an ETF like SPY. The S&P 500 is generally considered a good proxy for the overall health of the US stock market. When we look at growth rates, we're examining how much an investment would have increased over a specific period, assuming reinvestment of any dividends. This comparison will give us a clearer picture of Walmart's strength relative to the broader market. First, let's examine the S&P 500's performance. Over the past 3 years, the S&P 500 through SPY has seen a growth rate of approximately 20%. Looking at a 5-year horizon, the S&P 500's growth rate stands at around 13.65%. And over a 10-year period, the S&P 500 has delivered a growth rate of approximately 15.72%. Now let's turn our attention to Walmart Incorporated. For the past 3 years, Walmart has achieved an impressive growth rate of 39.99%. That's nearly double the S&P 500's performance over the same period. Over 5 years, Walmart's growth rate is 23.08%, significantly outperforming the broader market. And looking at a full 10 years, Walmart has delivered a growth rate of 21.29%, once again surpassing the S&P 500. What do these numbers tell us? They clearly demonstrate that Walmart has consistently outperformed the S&P 500 across all 3 time frames we've analyzed. 3 years, 5 years, and 10 years. This consistent outperformance is a strong indicator of Walmart's fundamental strength, its ability to adapt, and its capacity to generate significant returns for its shareholders. While past performance is not an indicator of future results, Walmart's historical data suggests it can be a valuable addition to a long-term investment portfolio, potentially providing returns that exceed the market average. It highlights that even a seemingly traditional retail company, when well managed and strategically positioned, can deliver exceptional results. Disclaimer. Before we proceed, it is absolutely crucial to understand the following disclaimer. This video is intended for educational and informational purposes only. The content presented here should not, under any circumstances, be considered as financial advice. I am not a financial advisor, and I do not possess the licenses or qualifications to provide personalized financial recommendations. The examples, analyses, and opinions shared in this video are solely based on my personal research, observations, and experiences within the financial markets. They are presented to illustrate concepts and potential scenarios, not to dictate investment decisions. Investing in the stock market involves inherent risks, and it is entirely possible to lose money, including your principal investment. The past performance of any stock or index, including Walmart and the S&P 500, is not a guarantee or reliable indicator of future results. Market conditions can change rapidly, and various factors can influence investment outcomes. Therefore, it is paramount that you always conduct your own thorough research and due diligence before making any investment decisions. Furthermore, I strongly advise you to consult with a licensed and qualified financial professional who can assess your individual financial situation, risk tolerance, and investment goals to provide tailored advice. This video is a starting point for your education, not the end point of your decision-making process. Your financial future is unique, and personalized guidance from a professional is invaluable. Please invest responsibly and with a full understanding of the potential risks involved. Let's take another close look at the impressive growth rates of Walmart, as these numbers are central to understanding its potential as a long-term investment. When we talk about growth rate, we're referring to the average annual percentage increase in the stock's value over a specific period, assuming dividends are reinvested. This metric gives us a clear picture of how much wealth an investor could have accumulated by holding Walmart shares over time. Breaking down Walmart's performance, we observe the following. Over the past 3 years, Walmart has demonstrated a robust growth rate of 39.99%. This indicates a strong upward trend and significant appreciation in value in a relatively short period. For every $100 invested 3 years ago, it would be worth approximately $139.99 today, assuming this growth rate. Extending our view to a 5-year period, Walmart's growth rate stands at 23.08%. This shows consistent, strong performance over a medium-term horizon. An investment of $100 5 years ago would have grown to roughly $123.08, reflecting a steady increase in value year after year. And looking back a full 10 years, Walmart has delivered an average annual growth rate of 21.29%. This long-term performance is particularly compelling, as it showcases the company's ability to generate substantial returns over an extended period, weathering various market cycles and economic conditions. A $100 investment made 10 years ago would now be valued at approximately $121.29 if we consider only the average annual growth. However, with compounding, the actual return over 10 years would be much higher than just simple multiplication by 10, which we will see in our later examples. These figures underscore Walmart's track record as a strong and stable investment, capable of providing considerable returns for patient, long-term investors. It highlights why a company like Walmart, despite its mature status, continues to be a relevant and attractive option for those looking to build wealth consistently. The power of compounding these growth rates over many years is truly remarkable, as we will illustrate in the upcoming sections. Now, let's look at the fuel for your wealth engine, your capital investment. This is the total amount of money you are physically taking out of your pocket and putting into the market. When you invest $25 every single week, the consistency is what builds the foundation. Over the course of 1 year, which consists of 52 weeks, your total contribution adds up to $1,300. While that might not feel like a fortune in year 1, let's watch how that steady habit scales over time. By the time you reach year 5, you have contributed a total of $6,500. At year 10, your out-of-pocket investment has reached $13,000. If you keep this pace for 15 years, you will have invested $19,500. By year 20, that total hits $26,000. If you are a long-term strategist and reach the 25-year mark, your total contribution is $32,500. And finally, at the 30-year milestone, perhaps as you approach retirement, your total capital invested will be $39,000. It is important to visualize this because it shows that you don't need a massive lump sum to start. By breaking it down into just $25 a week, you are slowly but surely building a massive stake in one of the world's most successful companies. Now, this is where the magic happens. We've seen what you put in, but what does the money actually do? Based on historical performance and growth trends for Walmart, let's look at the projected growth of that $25 weekly investment. Remember, your yearly contribution is $1,300. After 5 years, you have invested $6,500, but thanks to the growth of Walmart, your account value has grown to $14,422. You have more than doubled your money. By year 10, your total investment of $13,000 has ballooned to $41,606. As we move into the golden years of compounding, the numbers get even more exciting. At year 15, your $19,500 in contributions has grown to $78,447. By year 20, your $26,000 has turned into $128,288. If you stay the course for 25 years, your $32,500 in total contributions grows to $176,157. And finally, at the 30-year mark, your total out-of-pocket investment of $39,000 has reached a staggering $279,863. This is the power of starting small and letting time do the heavy lifting. What happens if you decide to up your game and invest $50 a week? By doubling your contribution, you aren't just doubling your end result, you are significantly accelerating your path to wealth. At $50 a week, your yearly contribution is $2,600. After 5 years, your total investment of $13,000 has grown to $28,845. At the 10-year mark, your $26,000 in contributions has turned into $83,212. By year 15, your $39,000 has grown to $156,894. After 20 years, your $52,000 is now worth $256,577. At 25 years, your $65,000 in contributions has reached $352,315. And at the 30-year finish line, your total investment of $78,000 has grown into a massive $559,726. Now let's look at the power of triple digits. If you can find a way to invest $100 a week into Walmart, you are on the fast track to becoming a millionaire. Your yearly contribution here is $5,200. At year 5, your $26,000 invested has grown to $57,690. By year 10, your $52,000 in capital has more than tripled to $166,425. At year 15, with $78,000 invested, your balance is $313,789. By year 20, your $104,000 has reached $513,155. At year 25, your total contribution of $130,000 has grown to $704,631. Finally, at year 30, your total investment of $166,000 has grown into a life-changing $1,119,452. For those looking to build an even larger legacy, let's examine the $150 per week tier. At this level, you are contributing $7,800 per year. After only 5 years, your $39,000 invested is worth $86,536. At year 10, your $78,000 has grown to $249,637. By the 15-year mark, your $117,000 in contributions is now $470,683. At year 20, your $156,000 has grown to $769,733. At year 25, you cross the $1 million threshold with $1,056,947 from a $195,000 investment. And at year 30, your total contribution of $234,000 has reached an incredible $1,679,178. If you are a high earner or a dedicated saver investing $200 a week, you are building serious wealth. Your annual contribution is $10,400. In 5 years, your $52,000 has grown to $115,381. By year 10, your $104,000 has reached $332,850. At year 15, your $156,000 is worth $627,578. At year 20, you hit the millionaire mark with $1,026,310 from a $208,000 investment. By year 25, that grows to $1,409,263. And at 30 years, your $312,000 in contributions has exploded to $2,238,904. At $250 a week, your yearly contribution is $13,000. After 5 years, your $65,000 is now $144,226. By year 10, your $130,000 has grown to $416,063. At 15 years, your $195,000 is worth $784,473. At year 20, you have $1,282,888. By year 25, your $325,000 is worth $1,761,579. At year 30, your total investment of $390,000 reaches $2,798,630. Finally, let's look at the $300 a week plan. This is for the most committed investors, contributing $15,600 annually. In 5 years, your $780,000 has grown to $173,072. By year 10, your $156,000 has nearly hit $500,000 at $499,275. At year 15, your $234,000 is worth $941,367. You become a millionaire before year 20, where your balance hits $1,539,466. By year 25, it's $2,113,895. And at year 30, your $468,000 in contributions has turned into a staggering $3,358,356. In conclusion, the data we have explored today paints a very clear and compelling picture. You do not need a massive inheritance or a six-figure salary to start building a life-changing portfolio. As we have demonstrated, simply investing $25 a week into a powerhouse like Walmart can set you on a path to financial freedom. The secret is not in timing the market or finding the next meme stock. The secret is the relentless consistency of investing every single week and allowing the growth rates of historically strong companies to do the heavy lifting for you. Whether you choose to stick with the modest $25 plan or decide to accelerate your journey by increasing your investment to $50, $100, $200, or even $300 a week. The most important step is the one you take today. By choosing Walmart, you are putting your money to work in a company that has proven its resilience across decades of economic shifts. But Walmart is just the beginning. The world of investing is vast, and there are many other vehicles that can help you reach your goals even faster depending on your risk tolerance and interest. In our upcoming videos, we are going to pull back the curtain on some of the most popular and high-performing exchange-traded funds, or ETFs, available today. We will be doing deep dives into QQQ, which tracks the innovative giants of the NASDAQ, SPY and VOO, which allow you to own the 500 largest companies in America. VIG, for those who love growing dividends. VGT, for investors who want to capture the explosive growth of the technology sector. And SMH, which focuses on the vital semiconductor industry. We won't just look at them in isolation. We will provide a side-by-side comparison between these ETFs and individual stocks like Walmart. You will see exactly how different growth rates affect your final balance, and most importantly, you will discover which specific ETFs have the highest potential to make you rich, just by investing that same $25 a week starting right now. The journey to financial independence is a marathon, not a sprint, and every great marathon begins with a single step. By watching this video, you've already started the process of educating yourself. Now, it's time to put that knowledge into action. If you found this detailed breakdown valuable and you want to see exactly how your money can grow in other sectors of the market, please hit the like button and subscribe to the $25 Investor. By subscribing, you ensure that our latest research and comparison videos are recommended to you, keeping you motivated and informed on your path to wealth. Thank you for spending your time with us today, and remember, your future self will thank you for the $25 you invest today. We will see you in the next video.